welcome back. This is Ross Beck. We're going to be covering in this session. In this session, we're going to consider another filter to be used in conjunction with our core trade setup. This filter we call time price vectors. First, let's compare the superiority of time price vectors versus Gann's traditional time equals price analysis. So W.D. Gann was a big advocate of the fact that price and time were the same thing. And there'd be a relationship between these two dimensions on the charts frequently. So if an XA leg had a range of $10, Gann would look at the AD leg and look for the termination of D to complete in 10 days. So if the AD leg was 10 days in length, time only, he would expect a reversal after that. So making a relationship between the price of XA and the time of AD. Now, this appears often on charts. Gann's techniques appear often on charts. However, there's a better way, and they are time price vectors. Now, what's the difference between the two? The first one isolates price and time, and the second one, TPVs, will blend time and price together on each one of the legs. So for an example, if we look at XA, what we're going to do is look for the time, how many days did it take to complete the XA leg, and we'll blend that number with the price range of the XA leg. And then compare that relationship with, or that vector number with the AD vector number, determined in the same fashion as the XA leg. All we do is take time and price, blend the two together on the AD leg, and come up with a TPV vector on AD compared to XA. And if there's an equivalency or close to it between the two, if the AD vector is 100% of the XA vector, then we can expect to see a reversal. So just comparing the two techniques, there's a relationship between the two. However, this slide is proving the superiority of the TPV as it blends time and price together on each one of the legs and then compares them, instead of price and time being separate with Gann's technique. So when we talk about time and price being blended together, what do we mean by that? How do we do that? A time price vector is a calculation that we can use to blend price and time. So to create a time price vector, we first need to identify a specific high and low. In our case, we'll first need to identify an XA leg. We'll use the Pythagorean theorem to identify the vector length for C. So maybe you remember this equation from high school: a squared plus b squared equals c squared. In this example, we're looking at A being equivalent to 10 trading days from this low up to this high. So A equals 10. B is 20. That means the price range from the low to the high is $20. So then with that, armed with that information, we can come up with what C is, the hypotenuse of this right angled triangle. And so this is what it is. So A squared is 20 squared plus B squared, which is 10 squared, equals C squared, which comes to 22.36 squared. That is what C is, and that is our time price vector number. And as we'll go forward, we'll see we're going to be measuring from the high to the low from X to A, and we'll come up with a vector number for X to A, and then we'll create another vector from A to D to see what that number is and if there's an equivalency between XA and AD. This technique is not new. There's a number of traders have used the Pythagorean theorem to create time price vectors. Notably Jerome Baumring in the Gann Harmony course, Brad Cowan, Four-Dimensional Stock Market, Structures and Cycles. He's probably dealt with that topic more extensively than anyone else I know of. And also Michael Jenkins in his book Secret Science of the Stock Market uses this formula in his trading as well. So how do we use the time price vector numbers if there's going to be a reversal at D? The first thing we have to ask ourselves is, does the time price vector terminate on an angle of the emblem determined by the quad? Remember, the tip of the quad will be pointing to one of the angles. We just got to confirm if we put our cursor over that angle to see what the time price vector number is. Are we getting a 100% number on anywhere on that line? It doesn't matter where, we're just looking for anywhere. And then after we've done that, we have to ask, is it within X%, and we'll use 20% as a default, of the quad bar. Okay, so the quad bar is the, when you get to the tip of the quad, what bar is that pointing to? Okay, at this point, we're only talking about time analysis. And we're going to go 20% either side of that quad bar to see if that TPV number is still valid, if it's within 20% within that threshold. That's a number I'm going to be using in these examples. You can tighten up the tolerance of this number to be exact or to be a certain percentage, and that's why I put X% here. You can choose yourself. So when we start getting into back testing, we can play with a number like that to quantify this. All right, so here we have Yum Brands on the S&P 500, and it looks like we got a potential bearish pattern here. And so the first thing that we're going to do is we're going to look at the BEX emblem, put that on here. X to A. Okay, we can see that the C point is just beyond the tetrad, so we need to line that up to get our scaling correct. So we move the history slider here like this. Okay, so now that's there. We can lock up the screen. Down here, the time price lock is in place, so we can move this back and forth and it stays the same. And now we're going to put the quad on here. No need for the alternate in this example. So you can see we got a bearish 52 here. The tip is very close to this angle, so we're going to be trading off this angle here. Now let's use the time price vector technique to see whereabouts on this line will be the optimum place that we'll be looking to put a trade. Once again, this is a filter, so it's your choice as to whether or not this is in your quiver of arrows to use when you're trading. So I'll show you the old-fashioned way, and then I'll show you how to do it with my button that I put on the screen here. But if you want to find the time price vector, we have to go under Tools, go to Gann, and go down to time price label. So there's no time price vector technique. It's the time price label that you're going to use here. So we go there, and I'm just going to quickly put it on the screen here. I'm not going to explain how I do this right now, but I'll go back and show you. Okay, so basically I've put the technique on the screen. I'm just going to show you how to set it up so it keeps on displaying what you need it to display, because this time price label is going to show you a whole lot of information by default that you probably won't want to be looking at all the time. So to change the settings, just right click on one of the labels there, and then you go over here. It says show labels, And look at all the different things that you can add. It's really nice to have all these options here, but if you click off everything, your chart's going to be jam-packed full of things that you might not need. So you notice at the bottom of the screen here, time, price, vector, that's what I'm interested in having ticked off. I've got a couple other things highlighted here, but ideally, just leave the time, price, vector on there. And so the label will look like this: starting point, the price, the date, and the time. There's no vector information on this point because there's no secondary point specified. The second that you put the second point here, the vector number is 78.487, and remember that's a squared plus b squared equals c squared. If you want to get your calculator out and figure that out, you can do that. This is just an easy way to do it for you. Okay, so I'm going to delete this and show you the easy way. I've set up a button over here. I just call it the time price vector button. It's got the settings that I like for that time price label. So the first click, you got to click on the X point. And then the second click, you're going to just use that to drop your label. It's just displaying the information. You notice how it doesn't change. You can just put it anywhere on the screen that you want. So there's my second click. Okay, so you can just leave that there. That's not going to give you useful information except for the fact that we know the date and the price on that high. Now to add the second label, go over here and hit this control panel button. And this is context sensitive information. What we need to do is go over here and highlight this. And you notice how this information changes now. It's now the properties for the time price label. You notice the top action here, add new label. That's what you want to use. Okay, so we'll hit that, add new label. And we're going to click over here at the A point. First click, remember second click is you're just going to drop the label wherever you want it to be visible. So just drop it somewhere like that. Now we can see the label there, 78.487. Next, since this is still highlighted, we can just simply go over here to add our final label. This is the most important part of this technique because now we're trying to determine where is the optimum place for D to terminate. So to do that, we're going to click Add New Label. We go over here. We're going to do this a little bit differently compared to what we did before with our 2 mouse clicks. I'm just going to click it here and click it like that. Okay, and remember the second click puts the label where we want it to be. The first one is you put it where you want it to be, whether it be the high or the low. And as I move this end of the line, you can see that the vector number is changing. Okay, and remember, as discussed, we're looking for a vector ratio of 100%. And the way that we're going to use this is we're going to take the end of this line here and we're going to drag it across the 52-degree angle on the emblem. Okay, we're not going to drag it on any other angle because the tip of the quad is on the 52. So we start over here with the last bar data and we look at the vector ratio 70%. We move it along here slowly along the line and we can see that the vector number is getting higher and higher. Now we're on the same day that the quadrilateral is expecting a reversal. We look at the vector ratio. It says 83.2. It's still not 100%. What you want to do is keep moving this along the line until it hits 100. Okay, so we're moving it along here. 99.78. That's about as close as we're going to get. If we move one more day farther, it's 101. I'm going to go for 99.78 and drop it there. All right, so this is the magic day that we expect a reversal. That's Friday, October the 3rd is going to be the day we expect a reversal based on the time price vector. The quad, on the other hand, is telling us that Saturday, September the 20th is the day to expect a reversal. And of course, this is a calendar day chart. We know there's no trading on Saturdays. It doesn't matter. We're going to still use these dates for analysis. Now, as mentioned, once we've determined, we first have to determine if the time price vector ratio actually shows up anywhere on the 52-degree angle. And if it doesn't, the quad's pointing to 52, we drag it back and forth across here. And if we don't see it hitting 100, anywhere along the line, we're going to say the time price vector technique is not going to be applicable in this particular trade situation, so we disregard it. If you're using this as a filter, this is one of those times where you'd say I'm not going to take the trade at all because I need that filter to be showing me 100% on the 52-degree angle. As mentioned earlier, you can set a tolerance in your own personal trading plan to, say, for an example, 20%. And so that's what I'll do with this example here. So if we look at this time price vector date, we're looking at October the 4th, and we're going to compare that with the tip of the quad date is September 20th. So it looks like it's a couple of weeks difference. Is that acceptable? Well, based on our criteria, if we set the tolerance to 20%, then the answer is yes, we can go ahead and take this trade. And so how can we identify whether or not this falls within the 20% criteria? Well, you'll get the hang of this after a while, but if we just do a time measure, and that's a technique that I have set here. You can search for it in your tools, but it's really quite simple. If you measure from a low to, say, this point over here, the quad, tip of the quad, it says it's supposed to take 65 days in length for this trade to be complete at the tip of the quad. Now, what's 10% of 65? Well, that'd be 6.5 days. What would be 20%? That'd be 13 days. So count 13 days past this date here on the Saturday, and this will give us October 4th. It'll show you that October 4th is an acceptable day. Very late in the tolerance level of the 13 days, but still within the parameters that we set in our trading plan. Now that we've confirmed that the time price vector filter supports our trade setup analysis here for a bearish 52, it's a matter of putting in orders that will say, yes, I'm willing to be a seller on this date as late as Friday, October the 3rd to get short. And that's quite a ways in advance. So let's just add some bars and see how this plays out. And notice why I started the analysis when I did was over here on the Tuesday, because it took out the high here of the B point. And that bar did that. Even though the subsequent bars are going lower, we still have done our analysis in advance. So let's keep going here. So basically we've got a contact with the 52-degree angle here on the 19th of September. So we would be selling at the 52-degree angle here. So let's get short. We'll add some bars. We'll do a single in scale out method. We're going to use the range of this bar. Okay, so if the market goes below the low here, we're going to be short. Okay, so be short here. 37.51. Our stop's up at this high here. We hit the first target. We move our stop down to 38.88. We hit the second target. That means we've sold or bought back our second contract or number of shares here. In this example, we move our stop here to where we got in at 37.51. And now we're going to use the 3-bar trailing stop. All right, so now our trailing stop is at 37.43. It's below 37.51, so now it kicks in. And our last unit will use the 3-bar trailing stop. 36.10, 35.20, 34.14. Move it down here. Okay, stopped out at 29.32 on that. Not bad at all. So that's a bearish example of a bearish 52 on YUM using the time price vector filter. So I've added some bars here on the same stock. Here's our previous trade setup that we got out of. And as we continue along here, it looks like we have another potential bullish 52. So what we're going to do is first off put the emblem from the X to the A. Make sure the lock's on here. Okay, there's our emblem. We want to do a little scaling here, lining up the C point. So to do that, we'll drag the history slider like this. And isn't that cool? We can see we're clearly going to be in an alternate quad situation here. See how the angle confirms these highs perfectly. Look how the emblem shows the support along this line as well. It's very cool how that happens. Okay, so let's add the quad now. A. We're going to choose this as B. We could do that, but it looks like we got an alternate situation here, as well as over here our C point is going to be there. And so we can see that the price action is inside the quad here nicely. The tip of the quad is pointing to 52. So there's our bullish 52 that we're looking for. Now our scaling is set, so we'll lock up the screen here. And now we're going to do the time price vector. I'll use my button that I've set up to do this automatically for me. So select the X, drop the label, and I'll open up this, what's it called again? Control panel. And since this is highlighted, I can simply hit this, add new label, and I'm going to select the A point, and I'll just move that over here. So our label says A squared plus B squared equals C squared, or C squared is 47.524. With this still highlighted, now the important label comes on the screen here. We're going to go add new label. Like I said before, we'll just do 2 quick clicks like that. There's a label. At this point, it's 188. That is too high of a number. We're going to be moving this part of the line along the 52-degree angle to see if it shows up at 100%. Hey, there we got 100% right around there. Okay, so close enough. We'll just put it there. On this given day, the 22nd of February, we have the time price vector complete on this date here. And then we compare that with the date given by the quad. The quad is saying the 28th. 28 compared to 22, we're talking 6 days difference, and 6 days compared to, let's do that time label, time measure. 53 days on the AD leg based on the tip of the quad. 53, remember, if we use a 20% rule, that means we got a latitude of 10 days on either side of the tip of the quad to expect to see a time price vector complete. And we said that the price, not the price difference, the time difference from the tip of the quad, February 28th compared to the 22nd, that's 6 days. So that's definitely within this 10-day window that we're looking for. So there we have it. Our time price vectors confirm the fact that we expect a reversal to happen on the 52-degree angle here. So once again, it is a filter. We don't expect things to reverse exactly on this day here. And for what we expect, it's never exactly on the tip of the quad over here. The first thing we do is first confirm whether or not the tip of the quad's pointing to the 52 and whether or not the time price vector supports that analysis, which it does. And with that, armed with that information, now we can look for trade setup opportunities. If the market comes down and hits the 52-degree angle, we want to be long, and we'll go from there. So let's add some bars. So buying on a limit, boom, right there. We could buy on a limit on the 52-degree angle. I prefer to do the range, the high of the low bar. This is the low bar. We're going to do a single end scale out setup here, high to low. And we'll put that over like that. And we're going to add some bars to see if we get filled on this. So if it takes out 24.41, we're going to be long, which it does. So let's just zoom in here a little bit. Okay, so closes on near the high here so that we hit our first target and our stop is moved up to here at 23.89. Let's add some more. Hits our second target. Our stop is going to now be at our entry point. And we're going to use the 3-bar trailing stop. So let's do that right there. And that's going to kick in only after it goes above 24.41. Okay, so now our trailing stop is in effect. It's above the entry point. Okay, and there we get stopped out at 26.48. All right, so once again, 2 consecutive trades within a few months of each other on Yum Brands. Let's look at another example. All right, so here's CITRIX Systems on the S&P 500. Let's put the emblem on the screen here. Step number 1. All right, we can see the C point here should be underneath the tetrad, so I'm going to do some scaling here. Okay, there we go. I'll lock up the ratio here in the bottom right. We can put the quad on. And I'm going to choose this low here and the high. All right. So we can see that the tip of the quad here is close to 52. That confirms that. And here's notice here's looks like possibly a ZBD that we can draw here. So let's do that. Practice what you've learned here, drawing a trend line from the Z point, to the B, and we're just simply going to drag this over here. You can see the tip of the ZBD line is almost the same day, just one day away from the day that the quad is saying that there should be a reversal. So that's useful information. If you were using the ZBD as a filter, this would be one of those times when you would say, yes, I will take this trade. But we're dealing with time price vectors. Let's apply that. So time price vector from X. There's the label, the first label. I'm going to open up our little control panel, and we'll put the add new label, click that, and go over here and show that here. Vector is 51.426. Remember, a squared plus b squared equals c squared. That's where that number comes from. And now the all-important final label, add new label. So I click that, and undo my two quick clicks there. The label's over here where I can see it. Now I'm going to drag this one over here along the 52-degree angle. Do we get 100% reading somewhere along this line? Clearly we do. And to pinpoint it exactly, where is the 100% number? What day? 101.6. Got 99.67 on this day over here. So one day before the tip of the quad day, that was September the 6th. And we have the quad telling us the Monday. So we got the Sunday, the Monday, and the ZBD line is saying Tuesday. So nice confirmation right in this little slot here. We expect to find a reversal. So now that we've done our analysis, let's add some bars and see what we get. Boom. So if you're buying, you could use, as mentioned in the Gartley trading method, you can buy on a limit at the 52-degree angle. You can put your stop below X if you want. I still like to do, even though it's a massive range bar, still like to do the buy the high of the low bar. And let's do that. We'll use the range of this bar to see if we can get into this trade. 16, anything above 16, we're going to be long here on this bullish 52. Okay, so we do get filled on this day. Our stop is below here. You know, confirm that these numbers work for your money management rules that we'll be talking about a little bit later in the course here. Let's add some more bars. Still waiting to hit the first target. Okay, finally we hit the first target. Takes a while, but now we're going to move our stop up here. We liquidate one position at 1726, 1727, and put our trailing stop on the remaining two contracts. Or 2/3 of your position, you're going to put a stop here. Let's add some bars. There we got our second target is hit now at 1853, and we put our stop at our entry point at 16. Now it's time to use our 3-bar trailing stop. And that is currently above 16, so it's 1641. Okay, so you would have been stopped here at 1743 on the remaining 1/3 of your position here with 3-bar trailing stop. So let's review what we've covered off here in this session. We talked about time price vectors, and what they do is blend price and time together. We compared that with Gann's methods of comparing just price with time and looking for a relationship between the two. It's actually better if you blend the two of them together on each one of the legs that we're considering. All we're trying to do is find the end of a correction, or in our case, the D point. So we're going to use the TPV for XA and use that information to forecast the completion of the D point, to forecast the AD vector. When we do this, we determine whether or not that TPV terminates on an angle of the emblem determined by the quad. Is that the case? If it is, then we can go to step 2. And step 2 is when we determine exactly at what point 100% TPV ratio is on the AD leg on the 52-degree angle or whatever angle we're trading off of. We got to ask ourselves, is it within the tolerance level of our trading plan? I'm using the 20% rule here in these examples. Just compare the time that's gone by in the AD projection going from A to the tip of the quad. We take that number in calendar days and we compare that with where the tip of the TPV ends up at 100% on the 52-degree angle, and we use that to determine whether or not it falls within that tolerance level of 20% in this example. So if we have that happening, then we can say, yes, we're using the TPV filter in our trading plan. Does it confirm the core trade setup criteria of the tip of the quad and the emblem together? That's our core trade setup. Does this filter confirm that trade setup? Yes or no? If it does, great. We're going to take the trade based on this one filter. The last example that we looked at had the ZBD and the TPV confirm. So it is possible. We don't have to just say I'm going to use one filter. You can use multiple filters on any particular trade that you choose to use. However, you are going to reduce the quantity of trades that you do, but you'll, depending on your risk tolerance, maybe that's a good thing. So that's it for this session. On our next session, we're going to consider another filter called the circumscribed objective.